Welcome back to the ETF Inspector. It is Sunday, August 17th, a little before 8:30 in the morning, and this is our weekly deep dive video where we look at the week ahead as well as do our payment distribution guesstimates for YieldMax funds Ulti, the Ultra Option Income Strategy Fund, and LFGY, the Crypto Industry and Tech Portfolio Option Income ETF. Before I start, I'm on X at ETF_Inspector1. We did have a large uptick in subscribers yesterday. In fact, the highest ever. I am accounting that to doing this show with Ambassador of Quan, Parabolic Nurse, Max Convexity, and Retire on Dividends. So you guys probably heard us talking about Ulti yesterday morning. If you didn't and you're on X, you can go back to Ambassador of Quan's site and replay the recording. I'm sure it's on Parabolic Nurses as well. This is just what's showing up in my profile highlight reel. But I also post when videos are coming out, distribution announcements, everything related to these ETFs. So if you are invested in either of these funds, or if you are thinking about it and you'd really like to see the inner workings, this is the video for you. This is a deep dive. This is not something real short and sweet. We take probably 45-50 minutes to go through line by line. Not the trades, because we've already done that on a daily basis, but the options looking ahead for the week, as well as making a distribution guesstimate. Okay, so we'll start with Ulti. Trades for the week, it was actually less than usual, so it was not so hard on me while I was on vacation. Approximately 315 trades throughout the week. This is Ulti here. As we scroll down, we're in Monday, switching to Tuesday, Wednesday. Wednesday was a big one. Thursday, another big one. And then they got most of the rollovers done, so rolling the options. So by Friday, that was the shortest amount of trades on a Ulti that I've seen so far since I've been covering them. So roughly 315 trades. And let's take a look at how those went. On Monday, they got beat up pretty bad. I believe it was Bitmine Immersion Technology. Ended up costing total of all the trades $70.7 million. So that's not usually one you're going to recover from. On Tuesday, they had a credit of 7.5, almost 7.6 million. Wednesday, down another 5.3 million in trading. Thursday, up $1 million, and Friday, up almost $6 million. But either way, that's going to result in a $61 million loss in options trading, or we're going to call these debits and credits because it's money spent. Cash flow was going out. So if we were going to make our estimate based off of the income alone, which that's the first goal, is to just make enough money to pay it out through options and don't worry about anything else. But that comes to a negative 10.88 cents per share. So that doesn't work. That's basically taking the option trading profit and loss and dividing it by the outstanding shares as of close on Friday. Next, we would do based off of the IV, our estimate. That's kind of that's our backup plan. That's what they promise. Otherwise, you'd get a distribution one week, you wouldn't get one the next week, and nobody would be interested in the fund. So before we can get into that, we're going to take a look at how the IV changed. That is implied volatility of each fund or each stock within the fund, and then we will come back to that. All right, so I go through, I use Market Chameleon. I am actually looking to find something different, and just to explain this, I weight how much money is in each underlying, right, their market value divided by the sum of all of them. And so then you just divide out each one, and it's roughly an average of 4%. You get some in the mid to high 2s, you get some in the higher 5s. I don't think we have 6% of our money in anything, so it's a it's a fairly tight range, mostly evenly allocated. When they're jumping some in, sometimes if they're bringing something in just for a short period of time, just a play on earnings or something along those lines, it'll be a smaller percentage. But that's the case here. I do understand that they actually are taking into account the volatility of each options trade. I could look that up on a daily basis. It would take extra hours per day. I just don't have it. So this is the best I can do, and just understand that it's not a perfect system. So Affirm Holdings dropped this past week to 77.2% IV. You can see the weighting right next to it, 3.3%. Applied Materials, 2.25% of the money, dropped to a 33% IV. I do have a feeling we'll be getting rid of these after this week is over. This was an earnings play because the volatility around these options for earnings, I looked them up before the show yesterday, something in the 70 to 80% range. So I'm sure we're not going to keep a 33% IV stock within the fund. AppLovin, just about 5% of the money. That's a decrease this past week to 53.9% on the IV. AST Space Mobile, we've had this one for a while, 5.5% of our money. It dropped to 78.1% on the IV. Bitmine Immersion, 3.78% of the money. This one helps our calculation a lot. It actually went down. It was even higher, but 136% IV is great as far as helping us build up for a nice distribution. Webull also, they actually went up to 97.2%. They're 3% plus of our money. Coinbase, a little over 4.6% of our money. That's an increase this week to 55% IV. Now, CoreWeave, we don't own any shares in it. We just trade options, and I'm sure these were volatile. But without them being able to fit into the way I do the formula, we're not tracking their IV. So again, I do understand this isn't perfect. I just wouldn't. I could obviously look up CoreWeave's IV, but then what do I multiply it by weighting wise? And then at that point, I'm weighting and using IV on their options, but not the rest. So understand we have CoreWeave trades in there, just not shares. Galaxy Digital is 3.8% of our money. They went up this past week to 89% IV. Robinhood Markets, 4.4% of our money. It was an increase to 62.4% IV. IonQ, we've got over 4.8% of our money in there. It was a drop this past week to 70% IV. And these are 30-day IVs. I am looking to start using 7-day IVs since this is a weekly fund and we're calculating this weekly. It's just not quite as easy to find. And I was on vacation, so I wasn't going to do a lot of hard work trying to change things up. Mara Holdings, only 2.5% of our money's in there. 61.7% IV is an increase from last week. Strategy now, formerly MicroStrategy, 4.4% of our money is an increase in IV to 55.7%. Nebius Group, a little over 5% of our money. That was an increase to 75% IV. Oklo, just over 4.5% of our money, decreased this past week to 88.6% on the IV. Palo Alto Networks is almost 3% of our money. That's an increase over last week, 44.3% IV. Again, this was another keep this one around long term. It seemed like we just brought them in for their earnings play. I believe their options around earnings were in the 70 percentile range. So once that's over, I wouldn't be surprised if we drop that stock from the fund. Palantir, only 2.7% of our money, and it was a drop to 45.7% IV. Although they're a wonderful fund, we don't have a whole lot in them because they don't have high IV. Reddit, 4.5% of our money. That was an increase this past week to 62.3% on the IV. Rigetti, 5.4% of our money, dropped this past week to 83.6% IV. Rocket Lab is just over 5% of our money. That's a decrease in IV to 73%. SMCI, only 2.7% of our money. It's a decrease to 55.8% on the IV. New Scale Power, 4.3% of our money, was a decrease this past week to 80% on the IV. Target Group, and I know that number looks goofy, so when they type it into their paperwork, whatever, in their spreadsheet, that's actually how it pops up. Obviously, we could just take out the decimal point and the plus sign, and it just happens the QSIP is 876E110, but every single time I download theirs, it's going to pop up that way again, so it just makes it easier to leave it alone. But Target, this is another, seems like a earnings play, right? We only have 3.3% of our money in there. It is an increase over the previous week to 49.2%. But again, I think their options surrounding earnings were a good bit higher. So I think that's the only reason they're in there, and they'll probably be dropping back off soon. Tesla, 3.1% of our money. So if you've been around for a while, Tesla was in, Tesla's been out, Tesla's been back in. Unfortunately, this last time hasn't worked out real well since we picked them up at like 340, 341. They dropped down to 330 in that short amount of time. But $10 on a $300 stock's not as bad as some others. But 3.1% of their money, and it was an increase to 43.7%. That one's surprising that's that low of an IV, because Tesla kind of bounces all over the place. Unity Software, about 3.7% of our money, is a decrease in IV over the past week to 62.9%. And finally, Upstart, 4.7% of our money, was a decrease to 60.6% IV. As I said, the average holding is about 4%. And then I just kind of totaled these up to recap. As far as IVs are concerned, we have 25 actual holdings, 26 if you included CoreWeave, but we don't own the actual shares. So out of the 25, 14 dropped in IV this past week, 11 increased. If we scroll up, that brings our weighted average to 69.31%. I believe that's a decrease. I forgot to type it in there. So yes, last week our IV was 74.3. So 69.3 is a decrease of 5%. So that does not help. So our price went down from last week, and our IV went down from last week. So that doesn't help with our estimate for our distribution. So everybody wants to know, are they going to pay 10 cents? Well, if we did it based off of the IV, we're looking at 7.86 cents. Now, again, I understand that my IV formula is not perfect, and it's not including all the higher IVs of the options, so I don't think it's going to be 7.86 cents. What do I think it's going to be based off of how everything performed? I went with 9.1 because I think they're going to keep on trying to pay 80% on the payouts like they've been. I think that's what they're aiming for when they're adding these funds in, and when they're selling strikes, picking the strikes to sell the options. So that's there's more IV than just to the holdings. So I'm going with 9.1. I called it on the show yesterday. I'm saying they're not paying 10 cents this week. I'd be happy to be wrong. Doesn't matter to me. So, all right, now we're going to take a look at the positions for the week ahead to see how we sit, how things are looking. And it just doesn't fit in the screen. Let me see if I can make it. Yeah, I know. Nobody likes the zoomed out because they can't see on their phone. But, all right. I'll have to move a little bit. So in gray on each line is the underlying, then underneath of it is the options that are, so it's a collar strategy here in Ulti. So they sell a call out of the money to generate income. They buy a put below the current price as a protection in the event we have a down week. That's the reason why we had rough times, and it didn't hurt Ulti quite as much as it hurt the underlyings. Sorry, I feel like I have to sneeze. Excuse me. Something new I added just this past week, how the stock performed throughout the past week, whether it was up or down, what percentage, just kind of for reference there. Okay, so a firm is sitting at around 78, 72. They've got 78 calls sold for this week, so they are already in the money by 0.9%. So they will cost money to close out if the stock doesn't drop below that. There's also the chance that they will close them out and roll up to a higher strike. And when they've been doing that lately, they've been rolling the put up as well to protect the new higher number. Puts at 72. So you'll see each one will have the call sold, and that's why it's negative, and then the put purchased, that's why it's positive. If there's anything different, we will highlight that. Applied Materials has 175s sold for this week. They're 8% plus out of the money with the stock at 161. AppLovin stocks at $438. They've got 450s and 455s sold, and you can see they've got their protection at 410 and 420, just like Applied Materials got their protection there at 155. So we've got 4% of ups or 8% of upside before we're kind of capped there, but we've only got 4% of downside before our losses get capped. Now that's not to say it has to drop down to that put before the put starts increasing in value. As soon as it starts dropping, the put will start becoming more valuable, and you get to sell the put at the end. So if it becomes more valuable, you'll offset losses. That's how that works. I'm going to try not to keep on explaining that over and over again. AppLovin, those calls are 2.5% and 3.7% out of the money. AST Space Mobile, 48.08 closing price on Friday. They got 51 sold. They're 6% out of the money. Bitmine Immersion Technologies at 57.81. I believe they got roughed up. I'm already not really talking about percentages increase and decrease during the week. I've just kind of got it there for you to look at. I want to say Bitmine got roughed up. Yeah, obviously they probably rolled these back when prices got real high, and then they trailed off. That would make a lot more sense as to why they've got these strike prices so high, 21 and 29, almost 30% out of the money. But as you can see, these puts are already working for us. So they've got $63 puts protecting along with these 75. That's why you got the same amount of contracts. They're already in the money by 9%, so they have value. And then these 57s, a much larger position, 17,500 contracts. They're not quite in the money yet, but they're close, and that has almost $7 million in value right now. So selling our puts right now would more than pay off the price to close our calls, and in addition, put more money in our pockets. Webull Corp, $16.01 with a $16 strike. They're in the money by a penny. They've also got 1650s that are 3% out of the money. Coinbase Global, 317.55 is where it ended. They've got 5.5% of upside as far as these calls sold at 335. They've got protection at 305, less than 4% away. CoreWeave, they just have, this is a little bit different strategy. They don't own the shares. They don't have a collar strategy. They just sold a put spread. They sold the 121s and they bought 116s, making it a $5 spread. The 121s are currently 21% in the money. That hurts. You don't want that when you sell something. Stock's under 100. But at the same time, that's why you do a spread. So instead of actually being worried about this being 21% in the money, you just know you're paying a $5 difference. $5 spread on 6,000 contracts is $3 million. So worst case scenario, this will cost $3 million to close out. Galaxy Digital, 2609. They've got calls at 29 and 31, 11 and 18, almost 19% out of the money. As you can see, these puts are again working. They've got puts at 25 and 26. They're already real close to the money, 0.3 and 4% out of the money. You see they've got a lot more value than what it would cost to close out these calls. Galaxy Digital dropped this past week 11%. Robinhood around 114. They've got 113s and 115s sold, so the 113s are 1% in the money and the 115s are 0.7% out of the money. Protection is a little bit further away. These obviously stock went up after they sold these calls. IonQ right around 40. They've got 43.50s and 44s sold for the week, 8 and 9% out of the money. Protection is similar, 6 or 7 and 8% out of the money on the downside. Mara Holdings 15.67. They've got 16 sold and 14s purchased on the puts, 2% out of the money on those calls. Strategy, MicroStrategy, 366.32 closing price. They've got 390s and 400s sold. As you can see, nearly 10 times as many at the 400. So that's the one that we're more concerned with. They're 6.5 and 9% out of the money. We've got our protection actually closer at 345 and 350, 4.5 to 5.8% out of the money. Nebius Group, 71.62 closing price. They were up on the week, 3.3%. I did forget to mention MicroStrategy had a rough week, down 10% overall. Nebius's 71s are in the money by 0.87%. Their 74s are out of the money by 3.3%. Oklo, 71.06 closing on Friday. They've got 76s, 77s, and 80s sold, fairly evenly distributed on the contracts. Roughly 7, 8, and 12.5% out of the money. You can see protection at 66 and 69, 7 and less than 3% out of the money. Again, quick math, the puts are more valuable than the cost to close out the calls. Palo Alto Networks, 177. That one's gone up this week, so that's one that we just recently picked up, maybe just for a quick play, so that's nice when it goes up. We've got 185 sold for this week, 4.5% out of the money. Palantir, they had a down week, but it's been a monstrous, I don't even know what you want to call it, month, 6 months, year, forever. So they had a down week, but if you look at their month, they're doing just fine. 3 months, 6 months, year to date. So Palantir's killing it. So it's okay if they pull back a little. They got 187.50s, 190s, and 192.50s sold, 5.8, 7.2, and 8.6% out of the money. We've also got our puts protecting pretty close, right? The stock's at 177. We've got protection anywhere from 170 to 175. They're basically 1 to 4% out of the money. Again, our puts are more valuable than the cost to close out those calls. So as long as these stay further out of the money than these, the calls will actually drop in value faster, making it cheaper to close them out. Reddit around 246, 246.50. They've got 245 sold already in the money by 0.6%, and 250s 1.4% out of the money. Reddit was up 15+% this past week. Rigetti 16.65, another one with a big week, up 9%. They've got 17.50s and 18.50s sold, 5 and 11% out of the money. They've also got their protection nice and tight, 16. That's only 65 cents below. Their protection's closer than their sold calls. So we've got upside room to run, and if it starts dropping, our puts are going to help us out sooner. Rocket Lab 44.27. They've got 45s and 45.50 sold, 1.6 and 2.7% out of the money. SMCI 45.37. They got 47s and 48s sold, 3.5 and 5.8% out of the money. New Scale Power 30, just about 35.50. They got 37s and 37.50 sold, 4.3 and 5.7% out of the money. Similarly close on their puts, 33s and 33.50s. Target just over $103. They've got 110 sold for the week, 6.7% out of the money. 95s purchased on the puts, 7.7%. Tesla, 330.56. They got 345 sold, 4.3% out of the money, and they've got 325 calls purchased, 1.6%. So we got these shares. They did drop already since we bought them, and we're closer to our protection, which is why it's much higher value than the calls. Unity Software, just over 38. They have 39s and 40s sold, 2.6 and 5.2% out of the money. And finally, Upstart at just over 64. 66 is the strike price on our short calls, almost 3% out of the money. We look at net assets, or assets under management, whatever you want to call it, AUM. The Ulti fund is currently worth $3.3 billion. Friday was our first down day we've seen in a long time as far as changes in shares. So people selling out of the fund, getting a little bit of panicky with the stock price under 6. So I did talk about it, right? So we ended last week at 603. We ended this week at 590. We're down 13 cents, but 10 of that was distribution. So realistically, Ulti went down 3 cents this week. So calm down a little bit. NAV is 591. But yes, people sold out of the fund on Friday to the tune of 2.1 million shares. There's still 564 million outstanding shares. And obviously, 10.06 cents was the most recent distribution that you should have got on Friday, unless you're one of the few that has the type of brokerage that makes you wait till Monday. All right, that's everything we've got for Ulti. Try to go through LFGY a little quicker. Ulti's just everybody's favorite, so we spend a lot of time on it. Okay, LFGY. Sorry, let me go back 1 second. So I had it up, but I didn't actually talk about it. So those share values in the fund change throughout the week, obviously on up and down days as well. So we're back to Ulti. We went up in value, 38 million on Monday, 58 million on Tuesday, gave back 11.8 million on Wednesday, and 31, almost 32 million on Thursday, followed by another down day of 27.5 million on Friday. These are not from trading. This is just, the ups and downs of values on a daily basis based on what the market does. So overall, the value of the fund increased by $25 million based on share value changes throughout the week. Okay, when we get to LFGY, trading wise, they had roughly 260 trades on the week. We've got Monday was pretty small, Tuesday, Wednesday, Thursday, lots of rolling on Thursday, and then Friday rolling everything else. So by Friday, everything gets closed and rolled for the next week. So on Monday, they lost $2.2 million trading. On Tuesday, they lost another $2.5 million. Wednesday was a credit of $400,000. Thursday, another credit, $700,000. Friday, a credit, $487,000. Ended up for the week down $2.9 million. So that's going to be a negative on the income estimate, so we can't use that. Next, we got to go to the IV. Okay, when we look at LFGY, they are not as evenly allocated. The average is still roughly the same, 4.7%. I mean, your average is just going to be, however many shares you have, or however many different underlyings, divided out. So there's 21. So you're basically just dividing 100 by 21. That would be the average. But as you can see, we've got 10%er in there. We've got a 2%er in there. So it's a much wider swing. Now, these guys are not specifically looking for high IV stocks to trade. They are looking for specifically crypto stocks to trade. So don't get these confused. LFGY is not like another Ulti. They don't do a collar strategy, and they're specifically picking crypto-related stocks and funds. All right, so 3% of the money's in Bitmine immersion. Again, that was a decrease this past week, but it still helps because it's 136%. BitDeer, almost 4% of the money, was a decrease to 97.6% IV. CleanSpark, 3.4% of the money, was a decrease to 67.4%. Coinbase, 7.8% of the money. At one point, we were at like 16% of the money in Coinbase, increased to 55% IV. Core Scientific, 4.4% of the money, 67.8% IV is a decrease. Circle Internet Group, 3.3% of the money. It's an increase to 82.7% on the IV. ETHA, that's iShares Ethereum Trust ETF, just about right on the average, 4.8%. That's a decrease to 71.9% on the IV. Galaxy Digital, 3.6% of the money, 89% IV is an increase. GameStop, there's that pie number again, 3.14%. Obviously, pi is not a percentage, or not written in percent. 61.1% IV is an increase. Robinhood's an increase as well to 62.4% with almost 7% of the money in there. Hut 8 Corp, right around the average, 4.8% of the money, 80.7% IV is an increase. IBIT, we don't trade options on them, but just the underlying itself is a 36.7% IV. That's an increase, and 10.5% of the money in the fund is within that. Mara Holdings, almost 5.8% of the money, increased to 61.7% IV. Mercado Libre, this one's always low. At least it went up. 4.2% of the money, 29.6% IV. Strategy, almost 8.5% of the money in there. 55.7% is an increase on that IV. NU Holdings, 4.4% of the money, decreased to 37.5% IV. NVIDIA might be the smallest, 2.1%, almost 2.2%. At least it went up 43.8% IV. Opera, 4% of the money, 71% IV is an increase. PayPal Holdings, another small one, 2.8%, with another small IV, 28.1%. Again, at least it went up. Riot Platforms, 4.2% of the money, 69% IV is an increase. And Block, just about 4% of the money, increased to 36.8%. So as you saw, lower IVs in general than what we were talking about over on Ulti. At least for this fund, though, more increases than decreases. 15 went up, whereas only 6 went down. And then, of course, we have MBTX, where we don't own shares and we do trade it. IBIT, we own shares, but we don't trade options. Okay, all of that totaled a 61.2% weighted average on the IV. That is an increase from last week. We closed at 36.50, which is an increase from last week. We closed at 36.39, I believe, last week. So our IV estimate should end up higher than last week, 42.97 cents. So then I just take all that into account, right? We look at share value changes. We were up 2.6 million on Monday, up another 3.1 on Tuesday, up another 670,000 Wednesday. Then we gave some back, 2.5 million on Thursday and almost $1 million on Friday. So we increased in value by 2 million, almost 2.9 million. Understand this is a much smaller fund, so these millions make a bigger difference. Take a look at how the fund performed over the week, and then just looked at previous distributions. You can always go to YieldMax's website and just scroll through previous distributions to see what kind of numbers they like to pay. These tend to be more in the 60s percentile range. So taking the estimate, taking all that into account, I come up with my guesstimate, and I say 45 cents is the payout that I think we're going to get this week, or at least roughly close to that. All right, when we go through now, taking a look at how the fund is set up for the week for our options. Again, they do not do a collar strategy. There are no protective puts within here. There are some puts, but there are put spreads that are that are sold usually, so that's not protecting anything. I didn't go through and mark how each underlying did throughout the week. Obviously, Ulti is the favorite, so I try to give as much information as I can. So let's just go ahead and get through this real quick. I forgot I like a comma here. Just makes it a little bit easier if we're talking about contracts. So this line, as always, is contracts / shares. So if it's written next to options in white, it's contracts. If it's written next to the underlying itself in gray, it's shares. All right, BitMine Immersion has 65 sold for their calls. They're 12% out of the money. What they do as their form of protection when they use it, which is most of the time, they buy a further out of the money call. So they do covered call spreads. You would call them a bear call spread or a credit call spread. So they've protected themselves in the event the stock runs $100 past that sold strike price. The only difference that they're going to end up paying is $5. At that point, both will increase simultaneously. So 12% out of the money on that. BitDeer Technology, $13.39. They've got $14.50 sold, 8.2% out of the money. Clean Spark, $9.75 was the closing price. $10 is the strike price selected for this week. That's pretty close, 2.5% out of the money. Coinbase, $317.55. They've got 3.92% upward movement that they could afford there with those 330s sold. I like to do this sometimes on ones that both shares, just kind of take a look at what strike price was selected for each. So BitMine Immersion is in both. Ulti, which is usually more risky, but they just traded it at a different time frame, has 70 and 75 compared to LFGY with 65. And then for Coinbase, LFGY selected 330. That's not what I wanted to do. And Ulti's got 335, so they're pretty similar. Again, that's going to have to do, I can explain it, right? So the reason they're closer on these is because they were further away last week, so they didn't have to, I don't want to call it panic, but just for lack of a better term, they didn't have to panic and close out as the strike got blown through. And so when it gave back some of that later on in the week, then they were able to make their roll, whereas Ulti was playing it tighter, so their calls got blown through, and on a high day, they rolled to a higher strike. Then when it came back down, that's why Ulti's got a couple that are sold higher, where normally that's not the case, but it's because of being tighter the week before. Hope that makes sense. Core Scientific, 14.13. They've got 14 sold for this week. They're already almost 1% in the money. Circle Internet Group, 149.26. They've got 155 sold. Circle's a tough one to trade because they're usually the biggest winner or the biggest loser. So trying to get that option play correct is tough. If you watch my personal trades, I had 2 weeks in a row where they whooped me, and I said I'm not trading Circle anymore. What's this? iShares Ethereum Trust, ETHA. They've got 33.15. Closing price Friday, 35 sold for this Friday as well. 5.5% out of the money. They do have $3.7 million in First American government obligation funds. Basically, just consider that a little bit of dry powder, and then cash. They don't have cash. Negative $725,000. So basically $3 million in dry powder. And before I forget, I didn't hit on that on Ulti. So Ulti's got $244 million at their disposable there, and another 41, almost 42 million sitting in cash and other. So we're looking at, what's that, 285-ish million. So how can they possibly pay when they lost money? Well, it's not like every penny's sitting being used right now. They've got cash on hand. Depending on how the market goes, sometimes they put a lot more of that to use, and we're at nearly 100%, but then you have to sell shares in order to pay out if you have a bad week. All right, Galaxy Digital. I think that's another one that both have, so we'll take a look. They've got 28 sold, 7% out of the money with 26.09 as the closing price. Ulti's got 29s and 31s. So again, Ulti's higher where that is not normally the case. GameStop just under 23. They've got 23.50 sold. They're 2.4% out of the money. Robinhood, they've got two different strikes, 114 and 117 with the stock at 114.17. That's interesting. 0.1% in the money on the 114s and 2.5% out of the money on the 117s. Hut 8 Corp, 23.32 closing price. We're starting everything in the money this week. 22s and 23s, obviously only 57 contracts compared to 3,800, so the 23s are the bigger deal. So if we can win the trade on the 23s, it will easily offset any loss we take on the 22s. But they're 5.6 and 1.3% in the money currently. IBIT, again, we don't trade options on them, so this one can just go to the moon for all we care. It'll just increase the value. I'm not sure why they don't. That would be an interesting question, why they don't, because I have had people tell me that they trade IBIT and do well with it. It kind of stays within a tradable range. And if your answer is, well, that there's not very much to earn off the options, then it's kind of like, well, why is it in there? Mara Holdings, 1567. Again, these are starting in the money by 1%. So it's all going to have to do with timing of when they actually made the roll. See, I mean, if you rolled it at one point, you're going to have a real high strike. If you rolled it at another, you're going to pick a low one. And then when it went back up, you got beat up. So I think Ulti is going to be further out of the money on Mara as well. It is. At least it's out of the money, 2% compared to starting the week in the money. MBTX, no shares owned. We just trade both bearish strategies. It's a credit call spread with the sold call at 280, expiring September 19th. They're 1.1% out of the money, and then it'd be a bear put spread or a debit put spread, right? They bought the 255, sold the 175 to generate some income for it, or not to generate income, but to offset the price. And so we need the stock to drop to make that purchase 255 more valuable. We've already lost this trade once and renewed it, increased the prices. So hopefully we don't just keep on losing $5 million at a time on this MBTX trade. The put spread goes out to the end of the year. Mercado Libre closing at $23.92.30. That's $2,392. They've got $2,395 as the sold strike price for this coming Friday. That's 0.11% out of the money, or what's that? $2.70. Strategy, $366.32 closing price. $410 is the sold strike, almost 12% out of the money. How did Ulti play MicroStrategy? They've got 390s and 400s. So on that one, on MicroStrategy, Ulti's playing it closer. NU Holdings, 1310 closing, 1350 is the strike price sold for Friday's call, 3% out of the money. NVIDIA, 180.45 is the closing price, 182.50 is the strike price on Friday's calls, 1.1% out of the money. Opera, this might be the only one that doesn't have the other end of the call. It's the only one that's kind of uncovered. So if Opera were to take off, there's no limit to how much they could have to pay to close it out. But that's why you're paying for active management. They're not just going to sit still and watch. They'd close it out and sell a new one. But that's where they say the problems come when things take off during non-trading hours, right? Pre-market or extended hours, what they call it, pre-market or after hours. So 1750s sold with a 1632 close on Friday. That's 7% out of the money. Now Opera, they're a 71%er. I thought they might have been one of the lower ones. So not sure why they take that strategy on Opera alone. PayPal, 69.23 closing price. This one's a little different. They don't sell a call, they're selling puts. So out of all of the ones that they chose, they keep choosing to sell a put spread on PayPal, and they keep losing it because it keeps on dropping. So they've sold the 70s, bought the 68s. So as long as it stays above 70, that's a win. It's currently 69.23, so those are in the money by 1.1%. They would need PayPal to go up, and that would actually work out well because there would be no cap to how much value increase would come with it going up, since there's no calls sold. Riot Platforms, 11.33 closing price, $12 strike price on Friday's expiration, 5.9% out of the money. And finally, Block. They've got two different things going on here. $75.80 is the closing price. They sold $77 calls for this week. They're 1.5% out of the money. They also sold $76 puts. So they have a call spread, a credit call spread, and a credit put spread. And the only way to win everything would be for if Block expired on Friday between 76 and 77. So that is a tight window. It is a 36% IV stock, so it doesn't make huge moves, but we'll see. Those 76s are currently in the money by about 0.25%. So we would need a small increase, but then we'd need it to kind of sit still throughout the week. So it's an interesting strategy. We'll see if it pays off. Okay, coming towards the end. Net assets or assets under management for LFGY is 191 million. There was no change in shares on Friday. It stayed at 5.3 million. The NAV and the closing price, that's a pretty decent spread. There seems to be a premium. People are willing to pay a little extra for LFGY than what it's actually worth. And the way we come up with that is just totaling up all the money and dividing it by all the shares. So it's not like it's a company where there's assets and forward sales and this and that. It's literally just, here's all the money divided by the shares. That's what it's worth. Well, it's actually, here's all the money divided by the shares. That's what it's worth. Most recent distribution, 44.84 cents. I think it's going to be real close to that again. That's why I said 45. I think that's everything. So it's a little after 9. I've got a dad joke for you. So if you're new here, appreciate you coming over. We picked up a lot of new subscribers yesterday after that, call it talk show, almost like a Sports Center version of talking about Ulti. So during the week, it's going over the trades for the day, changes in underlyings if they bought or sold into something new or got rid of something, changes in values, and taking a look at where the options sit and which options got rolled. Sunday is only the day where we go this deep of a dive, talking about everything, percentages of holdings, IV changes, that kind of thing, estimates. So just tune in throughout the week, and you'll be able to keep track on a daily basis of how your investment is doing and what kind of moves they're making. So thank you, everyone. Have a good rest of your weekend. And I got a dad joke for you before we go. What do you call two birds stuck together? Velcros. I know that one's kind of weak. I got a second bird joke, but it's weak too. What do you call a sick eagle? Illegal. All right, 2 corny bird jokes in one video. Okay, that's it. Have a good rest of your week, and I'll talk to you. I'll see you in the Monday video.